Oh, she was not happy with me. She was like, I told you to cash out at 500,000. I told you to cash out at 1 million. Why did you think 3 million wasn't enough? Me losing enough money early on at least got me to here where I'm just like, I don't want to be that risky anymore. I already have like money in crypto. So that's my risk. So like one of the first things that I have in the course is like, hey, this is not a get rich quick thing. The goal is just to build a portfolio faster than waiting. Like I show like a case study of say like AMC stock. All you need is $500 to show that this works. I think I could actually be someone in like the stocks space or nurses for healthcare workers where I could actually be one of those like top people to go to. I think that's huge to actually build my own brand.
All right, welcome to another episode of Investing RN. We have Brian. I thought your last name was Benji for the longest time. It's not, apparently,
It's not.
right?
Nope.
Brian, actually, I don't know this. Cerezo?
You're making me say my own last name wrong. Cerezo.
Cervezo.
Oh,
All right. I messed it up again.
You're the guy that's Spanish and you can't say a Spanish last name.
I have to change, I have to turn something on over here to use a Mexican accent. But anyway, so this has been a long time coming. Been chatting with Brian for a long time. I was on his podcast, The Direct Admission. And then we were scheduled to have an interview 2 months ago, and Nicole went into labor, and we obviously had to postpone. So here we are again, 2 months later. We're all busy people, so it was hard to line up schedules, and finally getting it done. Excited to have you here today.
Thanks for having me, guys. I appreciate it, and staying patient with the scheduling stuff.
Oh, for sure. I mean, we're all busy. It's not just you. It's me. It's not you. It's me. But we have a lot to talk about. There's some stuff. He's doing a lot of stuff with stocks, calls, puts. Those are like fancy terms. I don't know what they are, but he's going to explain them. Making a lot of money with that. He has a course he just designed, so I kind of want to chat about that briefly. And then the thing I'm most interested in is he told me something, I want to say 3 or 4 months ago, how he's paid off, or I don't know if you did it, but there's a strategy to pay off your home mortgage using a HELOC on the same house. And that just doesn't make sense to me. So we're going to get into that too. So let's start with from the beginning. Yeah. How'd you get into nursing? Where'd you find yourself in the hospital? And just kind of from day one.
Don't just say because you're Filipino.
I was about to start like that. but yeah. So if you didn't know, I am Filipino. But both my parents came from the Philippines. They were recruited as nurses, and then when I grew up, I didn't really know what I wanted to do. So when it came down to like senior year of high school, they were like, "Can you just please put down a major so we could actually figure out what you might be doing in life?" So I put down nursing, and this is when it was easy to get in like to nursing school. Like you could just apply directly into programs and hopefully be done in like 4 years. And they always said like if you didn't like it, you could always like switch majors. But I put nursing down, went to University of Buffalo, did nursing there. Like halfway through, I was like, I don't even know if I want to do it. But then I was like, dang, I'm already halfway through. Might as well finish it. Then I could always like do a degree afterwards. But parents told me most stable route. Then I also like saw how there was always someone home and the lifestyle. So it kind of like was a good way of me going into nursing, was just seeing that it's not as bad as what a lot of people think.
It's not as bad as we make it seem now.
Yeah, exactly.
Is it still not as bad?
I think it's not as bad now. Like when I was first starting, like I was like anxious going into work, and like I was like getting report and all that. Like you don't know what assignment you're going to get. But when I started getting like doing things outside of work is when I had like, I'm way more than just like going into like work. Like I have stuff going on outside that is also making me money, or stuff I'm more passionate about. And when I had that in my mind, I started being more relaxed at work, knowing that this isn't going to be my life.
Well, is that what was making you anxious? Just thinking like this is going to be my life for the rest of my life, or was it the work environment?
Like New York City work environment is pretty hectic, and like just I'm sure with like any other hospital, you got like those older nurses that just really like eat their young and like try to give the new person the hardest assignments possible. So like I felt like I was going through that for a little bit, and then so I'd go to like work early, have my headphones in, and see my assignment, and start like reading all the notes just so even before report, just so I could even like know what's going on. So that's what was like giving me anxiety. Like I'd even sometimes even call earlier, like ask the charge nurse, do you know what my assignment's going to be? And then I'll go to like the library at the hospital, and so I could look up everybody, just so I'd be more prepared. But I don't know, is
That sounds like nursing school.
yeah,
Yeah,
bro.
that's not great.
I hated that.
It hurt, man.
Yeah. What unit was that?
It was a heart failure floor. So like I think like if it was gonna be considered where we went to school in like Buffalo, like since it was like kind of like rural New York, like our heart failure floor would be like their CCU up there. So it was like titrating drips and all that too. So it's like I don't know, New York makes it hard for no reason.
Yeah. And have you been? Is that same job you're at now?
No, I
Right.
transferred to the EP lab
EP
like
lab.
9
Okay.
years ago.
And now, are you charge nurse, or are you just making funny reels about charge nursing?
I'm usually charge nurse or pre-op. Like I used to be in the rooms a lot, but then like I also like said like I don't like being confined to the procedure room as much anymore, because like you're just in a box the whole time, and I like to like walk around and like talk to people. So I'd rather do that. So I'll let the newer nurses have fun in the rooms and do all the circulating and documenting, when I could just direct or just throw in IVs all day. Like the joke around like work is like, what do I even do there? Because I'm always just like talking to people, and they're like, wait, did you make that reel on your break? I was like, don't say that out loud.
No, because I made it while I was working.
Can you just explain what EP Lab is? Because I didn't know what it was until recently, and I saw it on a couple travel assignments, which I applied to, just not knowing what it was because I was open to anything. But yeah, what is it?
So like EP is electrophysiology. So the rhythms of the heart, if you want to like simply break it down, like so you're helping out putting in like pacemakers, ICDs, or you're doing cardioversions or ablations to get rid of the arrhythmias that your hearts could go into. And for most places, it's tied in with the cath lab. So it's like EP. So like not a lot of places have their own EP lab itself, but like so if you're in more community hospitals, like you're in the cath lab, and then there's like subspecialty EP. But for some of the bigger hospitals, they have their own like EP lab.
Yeah, because so I didn't know much about it, and then I started hearing you talking about it on Instagram. But and then Jen, my wife, just got into cath lab up here, and she was talking about EP lab as well. So yeah, in our hospital, it's a smaller hospital, it is linked. So now that you're there, you don't have that anxiety,
No,
obviously,
not
if
at
you're
all.
at
Not at all.
what's the schedule like?
So ours is no weekends, no holidays, 312s.
I did IR for like 3 months. Apparently I wasn't a good fit. They fired me.
What?
So
You're too lax in a lax place.
No, I think I was too energetic.
Oh,
Everybody, yeah, like because I came from ER and I was joking around all the time and like running around doing stuff. I don't know, whatever. They didn't like. It was weird.
You're moving too fast.
I don't know what it was, but I don't know. And then there was like some drama with a day I asked to have off, and the charge nurse granted it, and then didn't stand up for me when management called me out on it. And I just like kind of looked at him and I was like, dude, you told me I could have that off, and he just looked at me like,
do you have that in writing?
Yeah. And I was like, you know what? I'm new. Like, they're not going to get me in trouble. Like, I'll take this one. And then like 2 weeks later, they fired me. And I was like, oh, all right. But then I got hired back to the same hospital in the ER. So it couldn't have been that bad. Otherwise, they wouldn't have hired me back. Because like the nurses on the units. And this is really cool because nurses, like you said, a lot of times eat their young and don't always look out for each other. But the nurses on the unit wrote this letter, and they all signed it saying basically they thought it was bogus, and I got a job there again. So, and that kind of plays into what we were talking about last night with like unions and banding together. So just we were talking about the thing going on at Rady's in San Diego.
I heard about that.
Are you
heard a little bit?
Do you have any experience with unions or strike nursing?
Yeah, dude. My hospital was on strike in this like 2 years ago or whatever it was.
Yeah, what's that like?
Yeah, what happens?
So the hospital didn't want to do like the raises, didn't want to do ratios and all that. So our contract was up, and then they're only trying to give like, I think like a 1 to 3% raise, and not put strict ratios in. So our union actually got together and put out the strike notice, and for almost like the 12 years that I've been working, since like the contract's every 2 to 3 years, like they've always like, the hospital always worked with the union to just figure something out, but this time there was like no way to figure something out. And then strike notice happened on like a Friday, and then we were on strike on Monday, and it lasted like 3 days though, and then we got like a 875 raise, like percent on our salary for 3 years. And then ratios, arbitration, if like certain units aren't getting the ratios they want, or they're working like super short staffed all the time, as long as it's documented and it gets to a certain point, you could bring it to arbitration, and the hospital would have to pay the unit and those staff members that worked those days where there was like a protest of assignment extra on their salary for those days.
So yeah, that was something that came up last night. So you give them like 3 days notice that you're striking. What happens on Monday? Nobody shows up, or what?
Nobody shows up. We were all on the picket line, like we were right outside, not in our scrubs, and in our, I guess like if you showed up to, I guess like the union rally or the strike, they would give you like hoodies, and because this was like in the middle of winter, like hoodies, beanies, everything, and just circling the hospital, like chanting whatever the chant is to
Whatever.
whatever
Who
it was.
decides? Who decides
That
that?
could get you in trouble.
I was like, just don't take a picture of me, because I still want to end up working when we're back.
But as far as like what the hospital does the hospital just shut down for the most part?
Oh yeah, like they transferred most of like the ICU patients that I remember to different hospitals, and since I work in like the cath EP lab, they couldn't do cases, so they would redirect, and or like the managers that, if they used to be like cath or EP nurses, they would have to scrub or sedate and do like the procedures, because like our CRNAs are also under our union, so no one could do anything under anesthesia, so everything would be like morphine, Versed, and fentanyl. Let's make it as let's rock kind of thing.
Wow. Okay. But the managers are not part of the union, it sounds like.
We had like, yeah, the managers are not, so they had to, a lot of them had to do some cases, like some simple like peripheral caths, or I guess like smaller procedures from the EP side. But EP, you could technically say nothing is emergent, because everything could be like temp wire.
Well, so that's about what I figured. I didn't realize it was like as far as transferring patients out and all that, but I knew they cut back. So that's at the end of the day, did you guys get what you wanted, or was there some sort of middle ground reached?
There was a middle ground reach, because I think originally what our union wanted was like 12% increase for 3 years, like 12, 12, 12. But we ended up like 875, because of, I guess they're saying, oh, inflation's not going to be whatever it was every single year. So like, of course, like the hospital that we work at, they have those big time lawyers that could draw out everything and push out the numbers that probably like the union can't hire out big time people like that.
I mean, I would say, I guess, if they probably lost a ton of money in those 3 days,
Oh
but
yeah.
compared to paying people the extra 3% for 3 years, probably ended up better, because that's what we were getting at last night. It's like, how is this financially viable for an institution to allow a strike to happen, for using travel nurses and all that stuff? But these guys, like you said, they have these big time lawyers and CPAs and whatever, and they're crunching all the numbers all the time.
Yeah, I'm sure like, yeah, they lost money, but it probably would have been more over the next 3 years, because then obviously that, from what I'm just thinking, is that because the contract got ratified, now they have to hire so many more people and do all that. So they probably crunched, like you said, all those numbers to be like, it might be a wash, we might be red for a little bit, but I'm sure you're going to get it all back really quick.
Well, that's why we invest outside of nursing.
Oh,
so
And one, you said it earlier too, because that's we've kind of tried to walk the line of like, we don't want to encourage people to invest so they leave completely. It's kind of to your point, like you started investing, you're much more relaxed, you enjoy your work better, you're not planning on leaving. I mean, I don't know, maybe you are, but you're not like planning on leaving, you just enjoy your work better because you have other options. So when did you start your investing journey?
Well, I've always been like in the stock market. So once I first got my first job when I was like 22 years old when I graduated nursing. So like I made like I don't know, was Robinhood at the time? I don't even remember what. Oh, I had E-Trade. I had like an E-Trade account, so I always like invested there, but I wasn't even getting paid a lot. So it was just like whatever I could into my paycheck because I was living at home. I was like, oh, I'll just put in E-Trade and figure out what we could do from here on out. But I wasn't even like knowing what I was really doing then.
Yeah. Did you start? So you didn't do anything fancy then? You were just putting it into.
I was an idiot. I was like
S&P
putting into like
500 or?
no, dude. I was putting into like penny stocks, be like, oh, I could get like a million shares of something for like
Shiba.
$100. If it was like, if this goes up to $1, I'm a millionaire. And then I was like, it never works out. I just was trying to find like the get rich quick thing, and that wasn't smart.
Yeah. And this was on top of like your 401k with the hospital or whatever.
Yeah.
Yeah.
Is penny stocks the same thing as day trading? I know very little about actual investing, so like in the stock market.
And like in the stock market, it's like penny stocks are like brand new companies that somehow got onto like they're called like the pink sheets, which is just like brand new. Like you could trade it only on certain exchanges, and it's literally just hoping that some like a big company buys them out so they could skyrocket in value or something big happens. But 9 times out of 10, or even way more than that, they're gonna fail. Like you're just losing money. But like if you wanted to make money off of it, yeah, you'd have to day trade it. Just like seeing like any kind of market swing, be like, oh, it's green now, sell. But I didn't know anything like of that before. I was just like praying that something happens.
Okay. And at what point did you start actually learning what to do and shying away from the penny stocks?
Like after I lost a few grand. So like once I lost like my first like I think it was like just $5,000 trying this, then I was like, what am I doing? I thought you're supposed to make money in the stock market, and then instead of just like looking on, I think it was like Tumblr at the time before Reddit even came out, then I then I started like actually just looking up what do people usually do, and it's like dividend stocks and like ETFs and index funds, and I started just throwing it into that, and that's when I was like, at the time, I was like, oh, okay, cool, compound interest calculator. If I can do this for 30 years, then I'll end up like a millionaire.
And that happened way faster than you thought.
Yeah, it happened way
faster. You got good at it.
Because I got good at it, then I figured out other strategies because like my whole point was like, I don't want to work as a nurse for 30 years. I don't want to wait 30 years for my investments to get there. So not to say like I'm looking for ways to like get rich quick, but there's obviously ways that people are doing that could get you there in half the time or faster. And that's when I started really like doing a lot of research on how to boost up the portfolio. What can I do? And that's how I like got into like options, and then I also like got into crypto and all these other things where I was like, what could get me there safely, and figure out like ways to exit or not feel as stressed at work. And that's where we are today.
Yeah. So, I mean, so you did your self-education, so you like actually understand it. Cause I've invested in the stock market very little. I have a friend that lives out in Michigan, and he bought like GameStop, AMC, like when they were low, and like I think he said he made over $500,000 in just a few months from them. And so obviously I took his advice because I was like, oh, you're a baller. So like, tell me what to buy. I'm going to buy it. And then that ended up like losing half of its value in the first 6 months.
Oh yeah.
So I don't understand anything about that. So how do you do your research? What do you know is actually a good buy now?
So for the most part, what I'm doing is I don't like really go with the GameStops and the AMCs because it's too volatile for me to track anymore. Like I used to do like all that where I'd be always looking at like the technical analysis, the fundamentals, earnings reports, but I would be sitting here on my computer like so long that I felt like I was actually like neglecting my family upstairs. So I stopped doing that, and I started doing my covered calls and cash secured puts, like what I teach in my course, where I'm just doing it with more bigger companies, bigger tech companies that will pay you money just for putting up the money or my shares up for collateral. And that could be either weekly, monthly, yearly, whatever you want to do. So I
Do you
think
want to
it's
give us a
easier that
bird's
way.
eye view of what those actually mean? Like what a call is, what a put is?
Oh yeah. So a call means you're picking a strike price, the price on a stock where you'd want it to go up to. And what I do specifically, a covered call means you have 100 shares of a stock, say like Apple. So now you would put those 100 shares up for collateral to the market. And while putting it up for collateral, you're going to say, I'm willing to sell it at a certain price. And the market will pay you something called a premium, which you could look at as income, just for putting up those 100 shares as collateral. And for the most part, I think I've been getting, you could do like, once you choose it, the strike price, the price that you're willing to sell, there's going to be a number called the bid, which you'll automatically get from the market. And that's how you get like the 100, $200 a week from doing that. And then like
And
I
so
teach
that's a call.
that's a call. And a put means technically the price is going to go down, or you're just putting up for what I do, you're putting up your cash that is equivalent of buying 100 shares up for collateral, and then they will pay you a percentage off that every week, month, year, whatever you choose. So that's why it's like a wheel strategy. If you end up selling the stocks, you end up with a whole bunch of cash. Now you could just be on that put side, and then if you end up having to buy the shares, you're on the call side and just keep recycling the same money over and over again while collecting these premiums, this income. So you're building up your portfolio with using the same money over and over again.
Interesting. Okay. So I mean, it's investing, so it's not risk free. So what has to happen for you for that not to work out?
So what I teach in like the course is that you have like a 90% control of everything that happens. The 10% that you can't control is what the stock market does. Like if it crashes, if anything like that. So the way that you don't lose money is, say if you bought 100 shares at $100 and you're doing these covered calls, and then all of a sudden the stock drops below your $100. You don't want to pick that strike price to be under $100 because that was your cost basis, because you would end up selling for a loss, right? So you don't want to choose like 99, 98 because you're technically down $1, $2 per share. So you'd be losing on that end if the stock ends up going above it again, and then you would have to sell your shares at 99 or 98. So like the goal is to always be above your cost basis, or watch it closely enough to do another strategy in there to call a roll, where you just keep pushing it down the line where your stocks don't get taken away from you at a negative. So like there's exit strategies to not lose.
All right.
That's what I'm
So,
saying.
Sounds like we're gonna buy your course.
yeah, I was gonna say I'm gonna have to buy this course, because listening to this, it sounds a lot like when our friend told Josh, like, let's go to the casino and I'll bet on red and you bet on black, and
One
then
of
we'll
us will
never
win.
lose. Yeah. But yeah, I mean, it's definitely something that's kind of over my head. But I guess like you've been doing this for a while, so you've already got time in the market, money in the market. But let's say I'm a brand new person, no money in the market. What does it look like? What do I need to get started, and what kind of returns could I expect potentially?
So what I always say, to be safe, on the safest way to do it, you'd have to have like $2 to $4 grand in your account, and we could use that 2 to 4 grand to make you like at probably 2% a week. Just to, and like, so that's 2% a week. That's what, 8% a month, and that's equivalent to like the S&P 500 for a year. Or that's because S&P 500 average is what, 8%, and then a high yield savings is the highest you'll get is like a 5%, but you could technically get 8% on your money potentially monthly. So like that's the
12
goal.
times 12 times more than the S&P 500.
Yeah.
On average. I know S&P 500 is like way high this year, so it doesn't really.
Yeah.
Right? Isn't it like 25% or 22%
Yeah.
this
But
year?
then like I think I threw up a post there because people were like, "Oh, you can't beat the market," and then I was like, I literally just showed you that I'm up 80% when the S&P 500 is 25%, and they're like, "Oh, you did that for 1 year. Show me your 5 year." Then I showed a 5 year. I'm up 145% versus like at 80%. I was like, I've been doing this. Like,
Right. Yeah. And like that's 25% for this year. Next year could be negative 6%, and it averages to the 8%. Because I know I have a lot of people that don't want to they don't want to invest in real estate because it's less right now than the S&P 500. But it's like, I like real estate because next year or the next time that S&P 500 is very negative, real estate's going to be a lot more consistent.
and that's the thing too, is like you can, with the strategy, you can make money in a red market, a bear market too. Like you're just not going to make as much because like the whole wheel strategy is it's better for, you'll make a lot more premiums if the market's consistently going up, but it'll be more suppressed if the market is red, but you'll still be able to make money from it. Just obviously instead of thousands, you probably make lower thousands or a few $100 every now and then. But you're always going to make money if you're playing it the right way.
Is this something you could do? So like what, a couple years ago, the market, during COVID, the market was obviously crazy. I don't even know what happened. People were making money all over the place. And then afterwards, my 401k went up pretty well, but then all of a sudden I started seeing it going down, and it went from whatever, it dropped like 10 or 15, $20,000. And being that we're in real estate, I just decided to pull it, and I pulled it. We invested it in a property, and then kept some of the other stuff, whatever. But could I have taken that money and done this strategy had I taken control of my because I don't even know what they were doing with it, to be quite honest. I was just throwing it in there, no idea.
Yeah. So like I think I talked about this with Josh when he was on my podcast. Like, is the 401k really worth it? 403b, because I don't even have a match because I have a 403b. I keep it in there, but I actually stopped contributing more than like 1 or 2% just to keep it active. But I know a lot of people that don't use their 401k or 403b and they just invest it into the stock market, and I've taught them how to do this, and they're like making like their weekly paycheck weekly doing this. Like I think the goal was that, I think in my course they say the goal is like if you could get to like $70,000 in this account, you should be making at least like 1 to 4k a month doing it. Like, and I could like even you could, and that's just with no secrets. It's like choosing like a Apple, Nvidia, Google, like big tech stocks that will pay you that type of money weekly or monthly, and just choosing the right days to buy it on, but sell those options on, and you should be making that much money with like 70k.
So how does I guess, like, because for us being in real estate, whatever's going on in the political space seems to trickle into what we're doing in terms of, now with rates being up and all that, it's changed the whole real estate market. Do you see that same thing happening in stocks?
Yeah, it's especially like the whole Biden going out, Trump probably going to win, and well, who's it? RFK is like the next candidate up, or Kamala Harris. Like, so all those guys are like big crypto people. So like the crypto stocks are going up, whereas bank stocks are looking good, but tech stocks are going down. Like you kind of get like what the sentiment of the market is, depending on, especially on election years, of what that person is talking about most during their candidacy. And it, like, yeah, it sucks. Just the swings are just so big, but also that gives you, as like a stock investor, uh, opportunity to like really capture those low lows and those high highs to get the premiums, because we're not really trying to buy stocks at the bottom and try to capture the appreciation at the top. We're literally income investing the way I do my stock trading.
That sounds a little more. I mean, I still don't understand what you just described, but but I feel like I could. I feel like I could understand it. Whereas like some of this option stuff, and like when they're like shorting this and whatever, I was like I watched that. What was that movie?
The Big Short.
The Big Short.
Roaring Kitty. Oh no, that's a different movie.
Oh, he does the same thing. He did like big options on that. But like
I watched.
That's what I want to talk about. Like, so like what I'm doing is selling options, and doing that is you're just pretty much trading the options for money, like income. Whereas a lot of people are buying options, and that's literally, in my simplest term, gambling, because you're just hoping something to happen, like where you have zero control. And a lot of people are choosing, like the biggest thing on these are like expiration dates. They're choosing weekly expirations. So if a stock doesn't hit what they want to hit by Friday at 4 p.m., you're out 5, 6, 10 thousands of dollars for no reason, because you're just like, oh, let me see what Reddit said, or let me see what's happened on Twitter or X, whatever it's called now.
So that's what I imagine all stock investing was up until like. So we talk with Elaine, we talk with you, we do talk with a few people that actually know what they're doing, and it's very confusing because you guys are far down the road, and I'm very much a beginner in the stock market world. But that's what I always imagined all stock market investing was. Just you buy something and hope that it goes up.
Yeah, and that's like the worst way. And yeah, just me losing enough money early on at least got me to here, where I'm just like, I don't want to be that risky anymore. I already have like money in crypto, so that's my risk. Like I don't want to be that risky in the stock market. And all the people on YouTube that teach options, like they teach it way too high end, whereas like someone like you guys, if you're brand new to it, you're not going to understand it. So like my whole point was like just to try teaching people as simply as possible. Like if I could get anyone to understand it, everyone can make money.
Yeah, I like that. I know there's so many strategies. It's just like real estate. There's so many different strategies you can do in real estate. Same thing with stocks. A guy that I knew from back down in LA was always telling us these different things to do, and he was big into Apple, and he was telling us, I forget how he was doing it, but it was like he was keeping his stocks in a certain account, and then he was taking that money, and then he could write a check from that money and essentially borrow against that stock. And he was like, and then I'll go buy a rental property with that, and then I just pay it back to the stock. I don't even remember how he's doing it, but he's telling me all this. He's like, and eventually you're taking your paycheck and you're putting your paycheck straight into your account, and then you're writing a check to pay your rent from it, and blah blah. And I was just like, hold on, dude. Like, let me just.
So we could
let's
like go
just
right into it. So that's also similar to what the strategy that Josh was alluding to with like even like the HELOC. But for the stocks, you could take a loan up against your portfolio if you have a certain amount. Like say if you have your account in Fidelity or even in Robinhood, you would go to a local bank and be like, this is how much my account is worth. What can you give me on like a loan? And that's how people do it. Like you get like a loan off your stock balance, and then depending on the interest rate, you just make all your money like that. Or you could even just do it right in the, that's how you could like live off your personal stuff. You could do all your personal bills with a loan off your stocks. Or you could just also, even simpler one is make a margin account on your brokerage account, and then you get,
I think that's what it was.
and
Yeah.
you could technically borrow from your stocks. Like you say, if you have $5,000 in cash, they'll probably give you another $5,000 in margin if you wanted to use it to buy something. Just you would have to pay it at a certain interest rate back.
So what are these loans like? Because I would assume that stocks are a little more volatile than real estate. So are these interest rates a lot higher? Are they giving you like very poor terms for these type of loans?
To be honest, I haven't done it with the stocks, so I can't give you like numbers on that. But for I do have margin enabled on my account, but I also don't use it, and I don't teach people to use it because it all takes discipline. But I believe it's similar to like not what the interest rates are now and not what a credit card is. So it's like somewhere in between like 15% or something like that.
I don't know what he was doing at the time, and I don't know if it was a time specific thing, but he was talking about getting some crazy low interest rates on these. I think it was like a margin thing, but he was saying he could borrow essentially half of whatever he had in his portfolio, and that was his strategy. But I think my question, because his whole thing was that you still have, let's say you have $100,000 invested and you borrow 50,000, you still technically have $100,000 invested, so you're still making money on that $100,000 while you're using this other 50 to go buy something else. But I guess my question was like, if the stock market crashed or something happened and now your shares go down, what does that look like?
It's called a margin call, and then you have to pay it back
Okay.
Immediately. That
Like
could
they're
ruin a lot
gonna
of
ask,
people.
yeah. Then they're gonna ask you like, you gotta fund it, or you're gonna have to sell something. That's where like a lot of people mess up, because when Robinhood started allowing it to be so easy to apply for options, there's like options level 1, 2, and 3, and 3 is margin, and that's what a lot of people teach, which I think is like the dumbest thing to teach that to like beginners. Is that people don't like you put in $500, and then if they're giving you 1,000, that's how you and then you end up using it and you buy something stupid and it goes red. Now you're gonna have to pay it back because you lost all your money. Like, and that's like, yeah, it's just a way to. It's just not a smart way to do it if you don't know what you're doing.
Yeah, I think, and he even said that. He was like, this is a kind of higher level technique. You know, there's better ways to start off. He was just big on, you know, it was interesting because he had done all the same stuff that we've been doing as we're going through our real estate journey, but now being 20, 30 years ahead of where I'm at, he kept trying to tell me, you know, oh, don't invest in these small duplexes. Don't do this. Don't do this. Like, just do this. Just invest in Apple. Just put your money. And I was like, well, yeah, but you can say that now because you've made your money by doing all these things that we're now doing. So it's like, I appreciate, obviously I'll take any input I can get. I'll listen to anyone, but you know, I do think you have to tailor your approach to wherever you're at in life. And again, like that goes back to, you know, are you trying to fully get out of nursing? Are you trying to cut back? Do you just want some peace of mind? So I think we've had to keep that in mind as we're taking advice. And even as we listen to Bigger Pockets, and the same thing, you know, it's like these people forget, like, hey, I started with like a tear down duplex.
Yeah. Yeah, that's like the same thing. We'll listen to all of our podcasts, be like, oh, a lot of new people are like, I want to do exactly what that person's doing. I was like, man, they're like 30 steps ahead of us. Just
Yeah.
take a few steps forward and we'll see where you are from there.
I think that's tough though, with everything going on now in social media. Again, we always talk about how things get oversimplified, and I think people forget what it takes to like get to where, you know, like let's say you know, we're seeing you and what you're doing, and it's like, oh, I want to do that, and then you jump in and you're not making $2,000 a month right off the bat.
No.
A lot of people are just, you know, don't have the patience, don't have the grit to stick it out. So for your course, what do you do to combat that, or to like help people so they're getting through it?
So like one of the first things that I have in the course is like, hey, this is not a get rich quick thing. Like the goal is just to build the portfolio faster than waiting. And like I show like a case study of, say, like AMC stock. All you need is $500 to show that this works, because I could show you how to do this and you'll make like 20, 30 bucks a week. Yeah, it's not a lot of money, but it's more money than you'll probably, if you saw 25 bucks on the floor, you're picking it up. So it's like, that's what I tell them. I was like, if you're knocking that, you probably shouldn't be investing because you don't know the value of money. You don't know that 25 bucks could turn into 30 bucks, then the compounding interest, because everything is going to go back into it and you're trying to grow. Like, you're not going to get the few $100 right away. You're not going to get thousands right away. Everything comes with time, comes with a little bit more money. Same thing with like real estate. You got to pay to play.
There was a time when people were picking up a lot more money off the floor
Oh,
during COVID and everything. So what was that like just in general? And then did you find any success during that time?
yeah, I did. When everyone was doing,
Oh yeah. Oh, yeah. As a matter of fact,
well, excuse me, and my glasses. But like when everyone was making like a crazy ton of money in the stock market, I went into crypto and I was doing like a lot of. I went back into like kind of like penny stock version of crypto, like brand new crypto, and I was like in all the Telegram chats trying to figure out which one could give me the highest return on investment, which would be like you put in a few $100 and you get in like 25 grand. So it was like one of the first ones in like Shiba at the time, whatever. I put in like $300. I ended up with like 30 grand out of it. And then I had like a few other ones where I put in like $1,000, and like this at the time, the crypto was called Saitama. And I'm like an idiot at that before, where it went from like $1,000 all the way up to 3 million. And then I was like, well, something here is working. And then my greedy self was like, oh, when it hits 4 or 5 million, that's when I'll fully cash out. So I ultimately only cashed out like 300K out of it. So like, like I've made a lot of money. That's someone's 3 years of paychecks or someone's like lifetime worth of paychecks. But that's something where I still need to be better at, is greed. But yeah, I made a lot of money there. And then of course, regular stocks, they just kept going up during COVID. And
how fast did that have to drop for you to not cash out until it was at 300,000?
It was so fast, dude. It was like it happened when I was at work, and I had like a mini panic attack at work because I was charged. I was charged that day. I was like running like the board and making sure everything's going on. And then I keep seeing like all these alerts. Like, so at the time, I think not just that account was up to, I think, just under 4 million. And then all of a sudden I kept getting alerts like, you're going down, you're going down, you're going down. And then I was able to sell like the 300K when my account was at like, instead of like 3 point, I think it was 6 at the time, at like 2-1. I was like, I need to get money out of here so I could feel better about myself. But because like everything goes about how much people are able to sell, like there's a liquidity factor. Like I think even if I wanted to put like $500,000 or more, I wouldn't be able to get it all out. So I was just like doing $100,000 trades at a time, being like, I need 100,000 now, 100,000, until I couldn't do it anymore. And then I was like, I guess I'm stuck with 300.
Oh my goodness.
Oh yeah, dude. I was
I
like,
just got some chest pain thinking about
and then
that.
I literally sat there.
Like, good thing I'm in the EP lab right now.
Yeah.
What is going on?
Dude, I literally just sat there and be like, wow, I thought I was going to retire tomorrow. And now I'm just, well, I made money, but I am very sad.
Yeah.
Oh my goodness.
So what would that have looked like if you had a day or two before that, if you had tried to sell?
I probably would have
'Cause
been
you
able
said-
to get all of it out.
The full 3 million.
I think so, yeah. Because
So
there's consistent buys going up on the chart. And then as long as there's buys happening with sells, you'll be able to get your money out. But once like this news started happening and all that, you're just seeing like red candlesticks all the way down, everyone selling their crypto. So it's like now you're trying to find out if there's anyone even trying to buy what you're trying to sell. And
Oh,
if
man.
if it doesn't match up, then you can't get out.
So what causes something like that? Why did everybody want to sell? Why did it drop so fast?
The CEO at the time was like doing like stupid stuff with the money, and like like with crypto, that type of crypto where it's like super small and people claiming it to be like a legit company and all that, and it just takes like one of the people at their board of directors or whatever they want to call it to do something stupid with the marketing funds, or all of a sudden that liquidity that was supposed to be locked up somehow unlocks and you see money getting siphoned from that wallet, and then you're just like, oh dang.
So that goes back to the gambling thing. I mean, that sounds like, because it's like, you know, I when I got married in 2016, Nvidia was like at $20, and I was gonna put $2,000 down on Nvidia, and then who knows what I don't know. It would be a lot now, but I didn't because we were trying to pay for a wedding. But I feel like it would have been that thing of like, when do you cash out? And it's like, like, again, like the only thing I ever play in the casino is roulette because I can understand. It's like black, red, black, red, black, red.
Until it hits green and you're just like, what the?
This game is rigged. But every once in a while, you know, like you mix it up or whatever. But I've done all right with roulette, and when I say all right, I'm usually gambling with like $20 at a time. So it's like I've made a couple hundred.
It's so funny hearing you talk about this because he's like gambling, obviously, but he's like looking at the numbers. Oh, he's like, well, it's a black 16, so obviously it got to be a number. And so
that's what I do.
I go full. Yeah, I go full Rain Man, like as if there is some sort of strategy to it. But it's just like I'm always just like, okay, one more roll, and I feel like the stock market like that. It's like you're at 3 million. Like, if obviously, you know, if you could go back, you would, but it's always like that one more thing, and I think that's what's like scary to me. And then so even when we were in Vegas for WealthCon not too long ago, and Josh was like, it was late, and we were kind of messing around, and Josh took like a $50. We were like playing on the same digital one, and he took like a $50 piece and just threw it on a number randomly, and it was about to roll, and I was like, dude, what are you doing? And I removed it. It hit that number, and we would have won like $1,800.
Jeez.
And
I knew what I was doing, obviously.
yeah. He was just like, but explaining that to my wife, just the fact that I didn't win $1,800 was very difficult. So how did you go through that in your family?
Oh, dude. Oh, my wife she was not happy with me. She was like, I told you to cash out at 500,000. I told you to cash out at 1 million. Why did you think why did you think 3 million wasn't enough? Like, it was like, I was like, I know, I'm sorry. Like,
Sorry.
like, I don't, she's like, you know
I
where?
already picked up some more
It's
shifts.
like,
We'll have to buy this. Now we'll have to buy the small yacht.
Geez, sorry. But now, like, I actually involve her with, like, whenever I'm up like a good amount, I'm like, what do you think? And she's like, she'll be like that angel on my shoulder, like, take the win and keep it going. Live to trade another day or something like that, because that was like, I don't even know what was going through my head. Oh, we're up to 3. I'll cash out at 5. Like, would I really have cashed out at 5? I don't know. I might have still stayed greedy and that, but at least that's what got me into like real estate, because I ended up having like $300,000 to buy like my properties, and I put more into like the stock market. I gotta like renovate the office down here. I was able to use the money in ways that would make me more money, so
Oh.
I could still be happy with that.
Yeah.
I have to
Well,
be.
I mean, it's still.
I'm just saying that
Yeah.
because it hurts.
Are you still in recovery?
Yeah.
Well, I mean, and then the like 300K is like nothing small. I mean, that's major.
Mhm.
Like you said, that's somebody's 3 years salary. But so but it's just, yeah, compared to 3 million, obviously that's
Yeah.
But so you said that got you into real estate. So what does your real estate portfolio look like?
It's nothing like yours. It's just 2 single family homes in Ohio. And like,
Okay.
so I wanted to get into it because I was like, taxes, at least you could help with taxes. You could do your LLCs and do business expenses. I needed ways to offset taxes, and I always was like you guys, listening to Bigger Pockets and being like, oh, this could be another way out. Some sort of, not going to say it's passive income, but income coming in while building up your net worth, because someone else is paying your mortgage, and that just brings it up over time.
What are there any tax benefits to investing in stocks?
No, dude.
No,
No.
0.
Zero.
Yeah.
Like, if you have a stock for over a year, your capital gains is long-term capital gains, which is lower than the short-term capital gains, which is like 40% versus like 20%, something like that. And then what I'm doing with my selling options for income, all the premiums that you get is added onto your income statement. So if you're making $100,000 and you made like $20,000, you're going to be taxed on 120 on your tax statement. But don't quote me, because I'm not like a tax guy, but that's what I was told.
But if you pair that with the real estate, and then you can, because we've done some stuff with like depreciation and all this, and kind of lowering our tax liability through that avenue. So that's something like for us now, the way we're set up with our real estate, we could maybe delve into this stock stuff, increase our income, and not have the same tax liability that somebody else might. So I definitely think the plan for us is to diversify into other avenues of investing at some point. We're just like all in on real estate right now, but long term, I think being in a little bit of everything is the best way to do it.
Yeah, I think so.
Yeah.
But I want to do more real estate. Just sometimes it's hard for me to. I think it's like social media, where I see everyone doing crazy stuff with Airbnb. Then I see people buying hotels, and then I see you guys doing like mobile home parks. I'm like, where do I fit? Like, I don't know. Like, I need to look deeper into what I want to do on the real estate side, and try not to be so scatterbrained on that side. Be like, oh, they're doing really well, why can't I do that? And then I'll see like a shiny new object and be like, oh, that looks cool too.
So I know for us, we would not have been able, at least taking the route that we took, we would not have been able to buy our first mobile home park if we hadn't already done like five smaller deals. That was the only reason we were able to get in. So I know there's some people, Grant Cardone, a lot of these guys, they're full of BS in my mind a little bit. It's like you have to start small.
Yeah.
Unless you want to give away like 90% of the equity just to learn from somebody, which I mean, that has its cons also.
So let me ask you guys, are you guys big on mentors?
Yeah.
Yeah.
So it's how do you find the right mentor that isn't just asking for thousands of bucks to do one webinar call?
I think that's really difficult. So the people I think paying to play is not. I think it's underrated. I think it is valuable to do that. And maybe I'm saying that just because we've done that and it's been valuable. But I think some of these people that are kind of full of themselves are going to charge you a lot. Whereas like at a certain point, you have to protect your time because we're all busy. We're all extremely busy. So you can't do everything for free as much as you even want to. So it's more just kind of protecting your own time. So you're not just getting pulled in a million different ways when your business is already keeping you busy.
But I think kind of to your point about, you know, not knowing where to start. Again, like these people always talk about this, don't, you know, the shiny object syndrome, chase two rabbits, catching up, blah, blah. It's like, it all sounds great and everything. And it's really easy to say that down the road. But like we very much had shiny object syndrome as we started off, and even still to a certain extent. I think we're a lot more focused now.
We're much better. We still have it for sure, but much better.
But it was like 3 solid years probably where we were just, you know, and it's like you listen to Bigger Pockets and in a month you hear 4 different episodes about 4 different strategies, and every single one of them sounds incredible. And I do think you just have to get in it, and you have to start, you know, like you started with penny stocks, and then it was just like, nah, this isn't it, and then you go try something else. I just think it's just, you just got to start somewhere. And then as far as the mentor thing, I think like the more you start talking about what you're doing, you end up just talking to people and figuring out like I love talking about real estate because of what it's been for us. So if somebody comes up to me and is genuinely interested, like you, like if you texted me and you were just like, hey dude, like I'm thinking about doing this, I would probably sit there and have like an hour conversation with you about it, just because I love doing it. But as far as like, yeah, when you get into like these mentor things and all that, like, yeah, I do think there's value in paying for certain mentorships.
Certain ones, yeah.
But you just got to be careful.
Yeah, I'll have to look into that.
Yeah. And I mean, a lot of that goes back to time. And so
he's looking at the freaking Google sheet. I'm being dull.
No. He's looking at the time.
Okay.
I'm looking at the time, and we still have 5 questions that we're going to ask you at the end.
Yeah. Well, and I do still want to ask about this HELOC thing, because I think that's like, yeah. No, we're not looking at the Google sheet yet. But I did want to ask though, because as we're doing real estate, you know, Jen and I have been handling the property management side of things, which is very labor intensive and takes a lot of time. What kind of time commitment do you have with the stocks that you're doing?
To be honest, it's super minimal. Like after you get the strategy down pack, I pretty much say that you need, like, all my Instagram posts, like, look how much money I made in literally 5 minutes. Like once you get like the strategy down packed and you know what you're doing, my Monday or Tuesday, like when the market hits, I don't even look at it. I look like an hour after market opens, I mean, and then I'll make my plays off of that. And then it's literally just choosing something that you're comfortable with. And there's certain things like a delta, which is like the percentage chance that the stock is going to hit this price. And if you choose it below like 30% or 20%, whatever your risk tolerance is, and I'll choose it, I'll make my money and go on with the day. And then the next time I look at probably like the stocks is if some glaring news comes out, or on Friday morning to see what the price is and choose my exit strategy. Do I let it just ride out, or do I, if the stock price is going past where I chose, do I do the second exit strategy of letting it roll? Or the third strategy is just let it buy the shares or sell the shares.
I mean, you're definitely like level 20 or level 100, whatever you want to say. So it's hard for, as a level 1, it's hard to imagine that it would only take 5 minutes to do what you're doing. So if somebody's just starting, how much time would you expect it to take to be able to make couple $100 a month or what?
So that just depends on how much money you have in your account. But if I was to sit with you, I literally taught a lot of my coworkers. I told them, just give me 15 minutes with your phone, and I'm gonna have you click everything that you need to click, just so you get the tactile feel of doing it. And then most of the younger ones get it. Some of the older ones, it took me like an hour or so to like literally sit them down and do everything.
That'd be Colin.
And then but some of the younger ones like figured it out right away. And I always tell them, just give me 15 minutes with you undistracted, and you're gonna learn it.
But then how much time would it take them on a weekly basis to kind of maintain, I guess?
Like 30 minutes after you figured it out. Like 30 minutes.
That's a good return.
I think so.
On time.
I think it's perfect because, and once you get to like the bigger portfolios, you're going to be making a few hundred, few grand. Like the people that already bought the course, a lot of them are already on like their first $1,000, and like the course has been out for what, like 3 weeks, not even. Because they also have bigger portfolios. Like they at least have like $50,000 portfolios, or I think one of them only has a 15,000. But not like financial advice. I said like all the stocks you have in there are trash. I think you just sell them and just have your 15 grand and start using it the right way. That's like what I told them.
So they could take their work portfolio, sell that, or like their 403b, 401k, they could sell that and then just like dump it into this other thing.
I told them some of them had it in like, I wouldn't do it with like your 401k or 403b. If you already have it, sometimes I tell them like if you're not going to use it for something super significant, and if you don't have the control over whatever funds that your hospital or whatever have, like if you can't choose anything, maybe it's not the best choice to keep it in there. But you also have to, I also tell them like you have to actually want to do this to do it, because if you're going to take out all your money from your 401k or 403b and get taxed a buttload on it, and you're not going to like be disciplined and do this, then just keep it in there and just maybe stop contributing, or maybe contribute less and just start a regular brokerage account, and we'll start from there, kind of thing. Because what's the point of having like a few $100,000 if that's what you have, getting taxed whatever the tax rate is on early withdrawal, just for it to be sitting doing nothing, like, or you buying something stupid with it.
Well, Josh said before this, he was like, we could probably have two episodes out of this one, and now we're like at the hour mark here, and we haven't even gotten into this HELOC strategy. So maybe
or the final 5.
I was gonna say let's run through the final 5, and then if you have time, maybe we can do like a quick thing of this HELOC strategy as like little bonus content.
Sure.
All right, final 5. So question number 1 is, what is a top financial resource you found? Where do you go to educate yourself?
For stocks or for real estate? Real estate is bigger pockets. For stocks, YouTube.
Financial, yeah, YouTube
University.
Is there good stuff on YouTube, or is it kind of washed out now?
I'll plug him, even though he probably doesn't even know who I am. Like a guy that teaches options really well, is his YouTube is called In the Money. That guy is like a genius. Like he puts out like hour-long videos and actually like breaks it down really well.
Okay.
But it's still very high end. That's why I put out my stuff, because like I showed it to a lot of other people before I started teaching it. They're like, I don't understand a single thing he's saying. But I break down the vocabulary, and then they all of a sudden they're like, oh wow, he's smart. I was like, yes, calling me stupid. But I'll teach it the stupid way. But
that's what you need though, because even just the vocabulary, like you said, it's the same thing as real estate. There's just like all this new vocabulary you have to learn. I mean, you said some stuff earlier, and I don't know what it was. So
I still couldn't explain what a call is or a put.
That's the dumb level. So
call up, but put down. That's it.
Still don't know. But
we're gonna have to buy really low, sell really high. Got it.
All I heard was penny stocks, invest in them, day trade. No. So the second question is, what advice would you give yourself as a new grad?
As a new grad, try not to be as anxious. Find someone, like for nursing, try to find like that group that's going to really help you in the beginning, to not let you drown, because the whole nurse bullying, eating their young thing, like that's such a true thing, where that can like make or break you as a nurse, where like you just might start hating your job from the beginning. And for something so stable where there's unlimited overtime, if you needed to fund your side hustles or something like that, you want to be able to have those options to do it. But if you're not comfortable where you're at, you're not going to pick up those shifts. You're not going to do the extra hard work.
All right, number 3, what excites you about the next 12 months? What are you looking forward to?
I think me doing like the courses, me doing more of actually building out my brand instead of just putting memes out there. I think I could actually be someone in like the stocks space for nurses, for healthcare workers, where I could actually be one of those like top people to go to. I think that's huge, to actually build my own brand.
Yeah, but we want to keep seeing some memes though. Every once in a while.
I just keep making fun of ER nurses all the
Hey,
time.
I'm all right with it. Nobody likes us, and we're okay with it. So number 4 is how do you define success?
Mine's super simple. If you're happy, you've put food on the table, and you don't have to worry about paycheck to paycheck, I think that's success.
Just so you wouldn't define it as cashing out a $3 million portfolio at 300,000.
No, because I definitely failed at that.
Well, I guess that's number 5. So there you go.
Our 5th question. Yeah. What's the biggest financial mistake you've made, and what'd you learn from it?
100% that. Imagine having like multiple millions at your fingertips and saying no. that hurts.
Okay.
But
you're like, no thanks. Money changes people.
Yeah,
I don't want to.
I don't want that. I did this for the fun of it.
Do you think that it would have? I guess, like, do you think you would be in the same place now, or would it have negatively or positively impacted your life had you cashed out at 3 million?
Oh man, I probably in the beginning negatively. I probably would have had that shiny object syndrome, where I would have just been like maybe buying real estate that I didn't do the numbers on, or buying that Lambo just to be like crypto boy kind of thing like that. Or I have a feeling negatively at first, but then after I probably spent too much of it, then I would hopefully changed it up.
But do you think by losing that, it kind of changed your outlook and your strategy as far as what you're doing and what you want to provide for other people?
Yeah, like that's when I really started like change. Like I've been doing like the selling options thing for a long time, but then I ended up being like, let me do more of it, because I don't want to be as risky. I don't want to have to worry about appreciation of the stock. I don't have to worry about a crash, because I just want to be able to consistently keep making income as I go. Like it's not going to be as crazy amounts, but at least I know I'm consistently winning.
We didn't talk about this HELOC strategy that you mentioned, where you're paying down your home loan using a HELOC, which, if you don't know, is a home equity line of credit, which is essentially another loan. So can you walk us, or
Josh,
so
why does that save you money? How does that allow you to pay down your mortgage faster? Because you're using two different loans on the same asset.
You're using your home equity line of credit to pay down your mortgage. So like there's the biggest thing that I know a lot of people are going to say is like BS in the comments if they get to it, is like simple interest versus amortized interest, where a regular loan, a 30-year loan, it's all front loaded with the interest. So that's an amortized loan, whereas simple interest is a HELOC. So it's based off whatever the balance is currently on the line of credit. So it all based off cash flow, where you use your line of credit, whatever you could do to chunk away at your mortgage. So say if your mortgage was like $100,000, you would, whatever you could afford, say it's like $5,000, you would use your HELOC to throw that at the principal of your mortgage. And then over the time of you having to pay back that $5,000, you're still paying off your mortgage every month. So you're just putting yourself down the line on the amortization calendar. So taking away all that interest for whatever the $5,000 that you just put in crossed out. So you're just constantly recycling your home equity as you pay it off over and over again.
So then you have to pay your HELOC back. And so are you actually, because I mean, you're going to have to pay that off. What are you using to pay that off? It's just your pocket money, or how?
So there's like two ways. A lot of people will just use whatever extra cash flow they have, whatever positive cash flow is, and send it right back into the line of credit and pay
just
it out.
Money that you're saving on the interest you don't have to pay anymore.
Yeah.
Because I feel like that would take a while.
So like the way I do it is I do it in like 6 months. Whatever my cash flow is, say it's like $600 a month, I times that by 12, and that's what I would chunk away. So at least I know I took off a lot off my mortgage, and then over 12 months I'll pay off that HELOC. While each month I'm still paying off my regular mortgage. At least I'm down however many months that took me off for the amortization calendar. And I know there's a lot of people that do like accelerated banking, where they actually clear out their savings and their checkings, and they'll throw it into the HELOC, and they'll actually make their like your W-2 income, all your expenses come out of the HELOC, and that's how you'll pay everything to try to pay that off. So just recycling your equity to pay off your equity.
Right. Well, so I feel like, so you're not saying like this is not like you can pay your house off in 5-10 years. This is still gonna take like 20 years. It's just not your full 30 year.
No, you definitely do pay it off way faster because, like, on the amortization calendar, so say each month you're paying $1,000. If you paid $6,000 up front with a chunk, you just went down 6 months, and then it'll take you however many months to pay off the HELOC, and then you'll chunk again, and then you'll chunk again as you're paying it off. So it does, I think, cut it down.
Let's say your mortgage is $100,000 and you throw an extra $5,000 at it. How much is your mortgage payment going to go down? It doesn't go down, right?
Your mortgage payment doesn't go down, so you'll still have to pay off your mortgage every month, but you're paying back that HELOC as well. So it is truly
Okay.
dependent on cash flow.
So
But
it's more out of your pocket. It's not like saving you money though
They'll save
throughout
you
the whole thing.
interest. They'll save
well,
you.
I think that's the big thing. It's like when you're paying, like you said, that of that $1,000 payment, like 70% of that is interest. So if you're paying that, month by month, you're paying that 70% interest. Whereas with this big chunk, you're
You're
paying
going
off
all the way down.
all principal. So you're bringing the
Mm,
principal way down, and then you're
mm.
just paying the interest on whatever. Let's say you borrowed $5,000. You're only paying interest on $5,000 as opposed to paying the amortized interest on $100,000.
Okay.
Is that
Similarly, yeah.
That
So
makes
like
yeah?
sense.
you're
But
you're
you
still
still have
you're
to
you're still paying off your mortgage, so like the principal interest is still there, but instead, like, say $1,000, it's like $700 is interest and $300 is principal. Now that you put that $5,000, now you're going down here where now maybe the interest is like 600 or $500, and now your principal's here. So you're bringing the principal higher up where the interest is lower and lower by chunking away at your principal with the HELOC.
Okay.
And
I
like
think
the
I think
biggest
my point is
thing,
that you still have to work extra or come up with the extra money to pay off the HELOC. So
yeah, that's why
it's extra out of your own pocket still.
it's extra out of your own pocket to pay for it. But the biggest thing is that you're using the HELOC as liquidity. Like when you regularly throw money into your house, it's locked away forever. But with a HELOC, now you have liquidity to actually use the money. And if you're using the money to pay off your house, you could actually have multiple facets of it, of being able to use it. And now when you're done paying off your house, you can use it to invest. You can do whatever you want with it. Like I personally do it with like the stock market. I've done it to pay off my truck. I've done it multiple different ways where I tag it in with like 0% interest credit cards as well. So it's like, why, as long as you could save up the money and you're disciplined to not go into like credit card debt or something like that, you could pay off things super quick to get a debt, mortgage, whatever it is, using stackable ways of using the banking system, credit card system to your benefit.
Well, and just kind of like on a more basic level, if you're not familiar with an amortization schedule, like you were saying, it's like upfront on a 30-year loan. Upfront, it's like heavy interest, but then as
Mhm.
it goes down,
Yeah.
like, so yeah, you're saying like that $5,000 chunk, it starts shifting
Yeah,
it.
it starts
I
shifting.
But
think I was
and
going to
and
say, so I think on back to the amortization schedule, on a 30-year amortization, I think you pay um, more interest than principal for the first 20 years. It isn't until year 20 where you're actually paying 50-50 finally.
So it's like that's why you want to, if you were to use this, that's why you want to chunk as much as possible within your means to get to year 20 as soon as possible. And then once you start chunking at that end, you're going to get rid of that loan really quick. Like
That makes
for
sense.
right now, I've been doing it with my house, and I've had my house for like 5 years, and I think I'm already on like year 15 or something on the amortization schedule.
that as much as you like that cash flow piece, that's like you were saying, because at first when you were saying, I didn't really understand, but now I get it's like you're saying that extra cash flow. So it's like you're not going to chunk 20 grand if you
Has to
can
be
only
affordable.
right. So you're basing it off like how much additional income am I going to have that I can actually pay this thing off in a year?
Yeah. Like
Yeah.
that's that strategy. That's the one I do because that's what I feel comfortable with. But I have heard of people saying if they have like $100,000 and they were given $100,000 line of credit, like HELOC, they'll actually transfer the mortgage onto the line of credit and just put all their income into paying that off. And that's how you can actually pay it off even faster if you're disciplined. Like, because everything's going to be based off of the average daily the average daily value of for the
Oh,
month,
it's compounded daily. The interest
compounded
is
daily. But it's like the average of it. So it's like if you stayed at $100,000 the whole month, you're going to be your interest is by the end of the month is going to be off of $100,000. But if you're constantly paying down with your paycheck, so it's going to be the average between like $100,000 and whatever your paycheck is. Say it's like 90,000, your interest can be off 95,000 for that month, and then you constantly go down. So it might start off a higher payment or equal payment as your original mortgage, but as you go down, the interest is probably going to be close to non-existent as you get closer and closer to zero, because it's off of the average.
Something to think about. There's even the credit card thing, the 0% credit card thing. I know other people have talked about that, and it is a. I mean, it's not necessarily risky as long as you do it and you're disciplined, but there's a lot of powerful tools.
That's super powerful.
Yeah.
Especially with the ones that are giving you like 24 months, 0% interest. It's like, why not use it?
Yeah. Like as Josh said, he recently mentioned that, what was the hot tub?
Yeah. So there's a hot tub that we're eyeing. It's like 15 grand, and that's a chunk of change, but they'll finance it 0% interest for like 5 years. I'm like, oh man.
So financially, it doesn't make sense.
It'd be stupid not to get it. Brian's like,
but you could have did so. Like, I like a similar situation where like you could buy something. So what I did to make sure I could get a vacation, say something like 15 grand, I put it on like my Capital One Venture X card, and I get like 10x points or miles for something that big. And then I put it on that card, and then all of a sudden I balance transfer that to a 0% interest. So I got all the points that I wanted, and now I'm transferring it to a 0% interest card so I could pay it off slowly over the 24 months. But when I get to like month like 18, I'll transfer whatever I didn't pay off yet to another 0% interest card, and just keep kicking the can down the road kind of thing. That's what I do.
And capitalizing on the points, which is great.
And capitalizing on points.
And you're paying what, like a 3% balance transfer fee?
Yeah, 3% balance transfer. So it's like $10,000. It's like what, $300? That's fine.
It's not that bad. Yeah, it's not 0%, but it's but you also got all those points. So yeah, a lot of ways to do things. So, I mean, you've mentioned the course several times. So where can people find the course that you're putting out, and where can people learn more about
Shameless plug. It was on, if you go on my Instagram, it's on Stan Store at Brian Benji RN. And then you could find it there. The first little one, it's probably the cheapest course out of everyone trying to sell the same thing. I just break it down way easier, and I feel it's more digestible, and I think it just makes sense that a lot of people should do it.
Yeah. And then your Instagram was the Brian Benji RN?
Yep.
It's just BENJI though, right? I mean, we'll link it. We'll link all
IE. But apparently I've been getting like a lot of messages, a lot of people having like putting the I as like a 1 or L and trying to like scam people. So I had to freaking get the verification thing just to show that I am the only person.
You've arrived.
People are influencer.
Yeah. Well, Brian Cerezo, thank you for joining.